I don't have the best of news for you with regards to inflation, crypto kids, because the core producer prices came in at 3.9%, whereas the standard rate was at 3.4%, highest since January of last year. But the price of Bitcoin is falling down to 71.4. Today is going to be very, very volatile. We're going to be streaming the FOMC on the Moonshow channel like we always do. In this video, I want to give you a heads up on why I believe, forget about me, why the head of the BLS believes that inflation will likely increase, how that is going to impact the price of Bitcoin in the macro, and some important data points that you need to be aware of today. If that sounds interesting, please do make sure to destroy the like button and subscribe to become a crypto kid. I would definitely recommend turning your notification bell on because tomorrow morning we're going to be doing a thorough investigation into the most recent laws that have been changed for altcoins, which altcoins are considered as securities and which altcoins are not. It's a fascinating topic. It requires time to cover, and I've saved it for tomorrow morning. Altcoins that are in the subject of not being classified as securities vary from XRP to AVAX to Doge, but sadly, they're not seeing bullish turns with this breaking news that in theory should have caused them to go to the moon. We will cover it tomorrow, so make sure you're staying tuned, subscribe, keep the notification bell on. In the meantime, let's go over producer prices, let's go over inflation, and see what we can expect in the Bitcoin markets today and beyond. So producer prices very high. It means that wholesale inflation is increasing. If wholesale inflation is increasing, then it's going to be transferred to the consumer, which will bring the CPI data to the upside. There are two other factors on which I think that CPI will increase. The first one is the personal consumption expenditure went up by 1 full percentage point, according to individual third-party aggregator Trueflation. These guys have been calling for the Fed to cut rates because they saw risks to deflation. But they have also acknowledged themselves that over the past 2 weeks, PCE has went up by 1% over the Fed's 2% inflation targets. Another reason is the energy shock that we're seeing. Once more, EJ Antoni says that the energy shock is not over and its repercussions will be felt for quite some time. It doesn't seem as, very unfortunately, geopolitical tensions are on a path of de-escalation. Let's hope to God that it is and it will soon all be over. But as suggested by energy prices today, we're still sitting at $100. And if we hypothetically continue sitting at $100, it will be very destructive for not just the American economy, but for the global economy. We're seeing energy lockdowns in Sri Lanka. We're seeing jet fuel prices go up insanely, causing big airliners to cancel flights. It's not good. The correlation between inflation, which is the yellow line, and crude oil, which is the Japanese candlesticks, are fully on par. We're not seeing an increase in CPI just yet because this month was the big hit with energy prices increasing, and that hit will be observed on next month's data release. I see CPI playing catch up to crude oil. And when it comes to the interest rate, I'm very sorry, Mr. President, but I do not think it is appropriate at all for the current Fed chair or even the Fed chair that you've nominated, who will go in June, to be cutting rates. The market tends to agree with me. We're seeing a probability for the first time that the Fed in June, of which whom previously they had a solid chance of cutting rates by 50 basis points, have completely forgotten that and now are thinking to even raise rates in June. So it's a very tricky situation from a monetary policy view. 2 weeks ago, if you had said, Crypto Kid, do you think they should be cutting rates? I would have told you yes, because the risks to fiscal policy are too high. They need to pay trillions of dollars in refinancing this year, and hundreds of billions will be paid in interest. Interest 3 years ago exceeded the military spending. In 3 years, we've already gone up by $6 trillion in national debt. So the risks here were too high. President Trump was on a path to want to reduce the US national debt. They created the Doge initiative, but then they pursued to go on with this war. And wars are the biggest printers of money, biggest adders of debt, and biggest causers of inflation. So how can you reasonably expect Fed Chair Powell to cut rates now? No, it doesn't make any sense at all. So in 2 hours' time, Fed Chair Powell is going to be speaking. I think the phrasing to look out for is if he has switched from a point of saying, okay, the risks to inflation have diminished to no. We now have severe upside risks to inflation, and how long will that pursue on for? For Bitcoin, I added to my long-term accumulation trades over on Levex, which you can follow with the first link in the description down below. If you want to trade crude oil, you can go to BTCC using the second link in the description. These positions are 2x leverage positions that I will be consistently adding over the next few months, all the way until October, because that's when ultimately I see Bitcoin bottoming out in. But until then, I think the chances of macro bearish continuation remain. We're still in this bear flag. We unfortunately could not break above 73.7, which was the level I stated I need Bitcoin to go over. That is the resistance from the EMA ribbon. That is the resistance from the upper Bollinger Band in order to get a move into 84K. Can Bitcoin still do it? Yes, it can, but even if we saw a move into 84K, I expect a rejection and continuation lower from that point anyways. Bitcoin at 84 has price-wise very, very critical resistance. It is the resistance which the last bull market sort of followed and caused a rejection at. I will highlight that for you. So in the mid bear market of the mid bull cycle, so the mid bull cycle bear market last time, you got a rejection from that critical line of support, and 84K lines up to be the prior support, now resistance for Bitcoin. You can shift it up a little bit. So from a price point of view, there is resistance. Bull and bear market support band is showing resistance. On the daily, the 128 simple moving average, the yellow one, is showing resistance. The parabolic SAR on the weekly is showing resistance. The weekly realized price is showing resistance. So 84, even if it is achieved, I see Bitcoin rejecting significantly from there. So I'm adding to long positions over a long-term basis. I'm doing it with very, very low leverage, being super responsible with it, and I still have my head short position opened. Now, keep in mind, in the immediate short term, we are seeing the 20 and 50 simple moving averages, as discussed yesterday, trying to experience a bullish crossover. In the path to a bullish crossover, or even a bearish crossover, price gets magnetized to that point of crossover. So we do have support here. It's only going to get concerning if Bitcoin breaks below 68, 67. And at that point, unfortunately, it will lead into a mid-50s Bitcoin. So I hope that makes things clear. Is there anything else we need to cover? So tonight, let's see what Jay Powell is going to say. It's going to be very, very volatile as a night. We will be live streaming it over on the Moonshow channel. I'll place an end screen for you to go and switch to it if you wish. I think it's going to be a very, very, very good one, a very important one. Before we say goodbye, silver is dumping to $76. Gold is also experiencing a fall to $4,800, but their macro structures look much stronger than Bitcoin at the moment. Fun fact, the June 3 trailer got released this morning. And every single time June trailers were released, they were done so at the bottoms for Bitcoin, or close to the bottoms for Bitcoin. And funnily enough, I mean, we are close to the bottom. I don't think it's going to mark the exact bottom, but I think we are close to the exact bottom. And I think dollar cost averaging is creating no harm. I think these prices personally are good to be accumulating Bitcoin in. And yeah, I'm just looking forward to escaping this phase and going into a lot of money printing, a lot of expansion and liquidity, and Bitcoin taking advantage of that. They're paying more interest on the debt than they're spending on their military budget. We're seeing countries across the world in times of energy crises reverting to money printing to help the public. These will eventually, after Q4 of this year, I think will in turn help Bitcoin. Make sure you're staying tuned for tomorrow morning's video. We will cover all coins, so subscribe, keep the notification bell on. And with that said, thank you so much for watching. Take care, and I'll see you all very soon. Bye-bye, guys.